just want to I just want you to do me a favor and tell me again what the temporary buy down rates are right now, especially when you've talked about that magic mortgage rate being, you know, not acceptable with the 5 to 5.5, but you're saying under five. What can people who listen to this say? Well, I would like to buy a home, but it's still too high. Are they below that magic number?
Well, they would be with the temporary buy down for sure. And one of the things, the one loan type that I think is a little bit underutilized. If you're going to be getting a conforming loan amount, so depending on what county you're in, a conforming loan amount is going to be somewhere in the 700,000 to 800,000 range. FHA, particularly if you're maybe looking to buy a home for your first time, you don't have that 20% down payment, which we always remind people you don't need 20%. You got to have good income, but you don't need 20% down. FHA is a terrific product to combine with the temporary buy down strategy. Why? Because the FHA rate generally is going to be lower than a conventional rate. Right now, FHA is right around 5 7/8 to 6%. So imagine with an FHA loan, you could buy literally a $700,000 home, put 3.5% down, use a 3-2-1 buy down if you can negotiate that with the seller, get the seller credit to fund that. You can have a first year rate at 2 7/8.
Oh my gosh.
A second year rate at 3 7/8. A third year rate at 4 7/8. You don't get to 5 7/8 until year 4. Well, again, based on where these projections are going for mortgage rates in general, it may be 2027 before we hit that magic mortgage rate in the low fives or into the fours. That timing would be perfect to then look to do the refi into a longer term lower note rate. So, and in fact, the same borrower I mentioned earlier today that I pre-qualified for a purchase, and we talked about the temporary buy downs, they're looking at a VA loan or a conventional loan. Their credit score is okay, a little over 700. But it's not the best tier for a conventional loan. The rate differential between a VA loan with their credit score and the conventional at their credit score was 1%.
Wow.
And we could get them 6% on a VA, but because of their credit score for a conventional loan, it's 7%. So the 3-2-1 buy down it's a big difference. If you're buying down off of 6%, your start rate is 3. You're buying down off of 7%, it's 4. So the temporary buy down strategy is particularly good for FHA and VA loans where you could literally get right at around 3% or possibly even into the twos that first year.